So, most investors are taught to focus on either cash flow or appreciation. Like you can only have one, right? But what if you can build long term equity and collect consistent government backed rent every month? That'd be nice, right? In this video, I'm breaking down how Section 8 investing gives you the best of both worlds, which is steady income now and a growing asset over time. Let's start with the basics, right? Equity builds in two primary ways. One, through loan pay down, and two, through appreciation over time. So when you buy a property and place a long-term tenant in there, especially one with reliable rent payments like a Section 8 voucher holder, you reduce turnover, which reduces maintenance costs and keep the cash flow coming, right? And at the same time, each mortgage payment chips away at your loan balance. So even if home prices were to stay flat, by maintaining ownership month over month, and when markets rise, that's when you build equity on both ends. But here's where most investors miss the mark. They chase appreciation, but in hot zip codes, and they bank on future value skyrocketing, right? Meanwhile, they're losing sleep over tenants who pay late or not at all. Section 8 flips that on its head because when rent is guaranteed and your property is occupied year round, you focus more on long term value without stressing about the short term. Your tenant stays, your rent shows up, and your mortgage gets paid down. And ultimately, your asset becomes more what? Valuable every year, right? So here's how I think about it. Let's say I buy a home for 150,000 with a 30-year mortgage. My Section 8 rent covers the mortgage easily, and that's including taxes, insurance, and still gives me a few $100s in monthly cash flow every month. Each year, I'm paying down about 2,000 to 4,000 in principal just by holding the asset. Over a decade, that's 20 to $40,000 in equity, not including the appreciation in value over time. And guess what? I didn't need a tenant with perfect credit or a booming market. I just needed a solid property and a government backed rent check. That's it. It's also why I don't chase appreciation plays because they look good on paper, but they depend on timing. Section 8 investing is about fundamentals. I focus on areas with steady rent demand, fair market rent, which is published by the US Department of Housing and Urban Development, HUD, that support my cash flow goals. Properties that I can hold for the long term without any drama. And when you think long term, you win in real estate. And Section 8 makes that a whole lot easier than most people realize. So, if you want to learn how I evaluate properties to build both equity and income and how I structure deals for the long term, I'll walk you through this full process inside my free training on my website, mosesthementor.com. You'll learn how I buy smart, I screen better, and I hold properties that pay you now and later, right? So, equity isn't just something that happens, it's something you create. And you do that with the right strategy and with the right tenant. Section 8 gives you the consistency to make that happen month after month, year after year. And that's why I love it so much, right? So, if this video helped you think big and beyond just quick cash and to start building lasting wealth, then do me a favor and like the video, share it, and also subscribe to my channel. So, stay committed, stay profitable, and I'll see you in the next one. Peace.